Hello, I'm Kiran. Today, I will present INDES, Intelligent Financial Decision Support System, an ML-powered mutual fund investment consultant. As Robert Arnott said, in investing, what is comfortable is rarely profitable. Our solution aims to make profitable investing more accessible through AI. Our challenge is clear. Individual investors struggle to identify mutual funds capable of delivering a significant return on investment. For example, a 50% growth in 1 year on a $1 million investment. Let's evaluate this opportunity. Is there a real problem here? Yes. Over 8,000 mutual funds are currently available in the US market. 66% of the funds underperform benchmarks. And obviously, 78% of fund selection. Eventually, 1.5% annual underperformance is reported versus S&P 500. Now, can ML help here? Yes. Machine learning is effective in pattern recognition using the historical data of financial transactions, investments in mutual funds, success rate, return on investment. ML can conduct multi-factor analysis, where in this case there are multiple aspects which leads to a success of a mutual fund. Further, ML can also work on real-time market adaptation. It can do training online to adapt the system to be more effective. Now let's see. Do people care if we solve for this problem? Absolutely. I would be happy myself. Over 100 million mutual fund investors are there in the US, and the mutual funds are in total worth $21.3 trillion. And there are significant investments that happen with $1 million, and the impact is very large. So people really care, and people are looking forward to an effective solution. Now let's try and understand the business need here. Who are we targeting? We're targeting HNIs, high net worth individuals who have a very high investment capital of 250,000 to $1 million. We're also looking at investors among this group who are technology savvy and aged between 30 and 50 years. As we discussed already, the problem statement is clear. High net worth investors struggle to identify mutual funds capable of delivering 50% returns within 1 year on investments of 250,000 to $1 million due to overwhelming fund choices, complex market dynamics, and delayed analysis of multiple performance factors. The importance and why it matters is as well clear, considering the opportunity cost of any delayed decisions that can lead to almost 10 to 15% loss. In order to prevent this loss and get as maximum financial gain, currently investors seek support from financial advisors and conduct their own individual independent research with the help of financial websites and analyst reports. However, this is a very time consuming exercise with a lot of information overload, and the analysis is always limited. So there is a clear problem and we have a business requirement here. Now let us also look at what are the impacts. I would break down the impact into two. One, the primary impacts are on the return on investment and the scale of impact. At the investor level, the return on investment is very high. ROI can go to a minimum of $500,000 per year per investor. Now, the scale, if we are able to reach 5,000 users, the total managed investments would be $2.5 billion. Now, the secondary impact is in terms of time. Instead of spending 15 hours in selecting an investment fund, we will be able to reduce the whole exercise to a 13 minutes period exercise. Now we are clear with impact, let's look at the constraints. Constraints are technical and business related. Technical covers data access delays, SEC compliance, and on the business side, the error rate is where error rate can be a maximum of 0.5% only. Further, there is strict risk tolerance monitoring, and we need a minimum investment of $250,000. Further, what outcome metrics should we track? There are two set of outcome metrics that needs to be tracked. First set is financial, the actual drawn in investment, risk adjusted returns, and portfolio volatility with prescribed target rate. Further, we have a user experience based outcome metrics, which includes time saved in fund selection, user satisfaction score, and user retention rates. Finally, we come to the last part of the success definition, which is the output metrics. Here we cover model performance as well as technical performance categories. Under model performance, we will target prediction accuracy, false positive rate, and risk assessment accuracy. Yes, and here the most prominent one is prediction accuracy, which has to be within the range of plus or minus 2% of actual returns. Further, in technical performance, we will need to cover model latency, data freshness, and system uptime. Further, moving forward to understanding what are the factors, how do we identify the features to be considered? We will need to do a domain expertise analysis with the help of investment professionals, and we will need to do independent market research, which includes academic studies and industry report studies. Further, once we have done the studies and interviews and observation of user interactions with consultants, we will be able to come to a set of factors which we'll need to cover, which we'll need to capture in the ML model. So as features, we will need to have inputs on fund performances, which will cover the historical data on all kinds of all the mutual funds that were recorded in the history of the US with the performance related metrics. Further, fund fundamentals, including what were the size of the fund, what was the expense ratio, and what was the experience of the manager who was managing the fund. Further, thirdly, we will need to cover the market environment, which includes the macroeconomic factors, market volatility, and interest rates. And finally, we will need to cover the risk metrics, which are beta and correlation, liquidity risks, maximum drawdown, and stress test results. Once we are aligned on the features and we start collecting data from different sources, which includes the government agencies, investment consultant agencies, academic research papers, and other third-party financial analyst companies, we will be able to implement the solution. And the solution validation has to be divided into a four-phased process, which should start with a historical back testing. That would be the first phase that we need to cover. And this will ensure that we validate the post-market data. Further, we will need to go into an expert review in which we will need to assign human investment advisors to assess the reports that has been created and complete an assessment and provide a feedback. Further, we would need to do a set of an investment exercise, which it does not involve an actual investment, involve real-time predictions, and we will need to run this through a period of 6 to 12 months to observe the uh, success rate of the success rate of the predictions. And these have to comply with very low margin of error and the outcome and output metrics that we have tracked previously. Further, we will need to conduct a pilot program in which a selected investor group with reinvestment tracking is conducted, post which post the success of the pilot program, we will need to roll it out to the wider group. From a technical architecture standpoint, we have to take a call to set up a system which is cloud-based, considering that it requires scalable computing resources with real-time market data processing. Further, the learning has to be a hybrid model with a monthly batch retraining and the daily model updates that has to happen. A monthly offline batch training, which has to happen along with the daily updates. Further, on the predictions, we will have to focus on an online prediction, considering the real-time recommendations and dynamic risk assessment that needs to be done. From a challenges and consideration perspective, we will need to evaluate market volatility impact, data quality, and availability. This this can be categorized under the data drift, where the data itself uh, changes over time, considering the information, considering the interest, the financial instruments that are available, and the new data that is coming into the play. Further, there is a concept drift that we will have to consider, considering that um, considering that the user interactions change, the preferences change, the actual model success rate itself change because of certain factors that we have already considered. And finally, we will have to consider other factors like regulatory compliance and privacy issues as well. Uh, as a result, we will be able to cover all the challenges and considerations. It has been a good discussion point that we have covered. In conclusion, INDES transforms complex fund selection into an intelligent automated process, helping investors achieve ambitious returns while managing risks effectively. I hope this session was useful for you. You have learned something out of this, and I've also been through a wonderful experience. Thank you very much. I appreciate your support. Uh, Thank you. Have a good day.